Africa's economies are growing rapidly, so there is an increasing demand for food. This demand has caused a surge in costly agricultural imports from around the world. Yet Africa is home to 60% of the world's uncultivated arable land. If farmers could increase their productivity to reach average global yields, and if domestic and regional supply chains could be strengthened, the continent could meet its own food requirements and have a surplus for export. But a lack of finance is holding back the development of the agriculture sector. Despite increasing interest from international investors, Africa's smallholder farmers and entrepreneurs still struggle to access the funding required to meet their day-to-day needs. They are unable to access better seeds and fertilizers or benefit from mechanized services. They continue to find themselves stuck in a cycle of low productivity and low incomes. Farming is a business, and businesses cannot grow without capital.
Commercial lenders are not willing to lend until they have the evidence that businesses are able to perform. But the problem is that businesses aren't able to demonstrate they can perform until they've received the capital. So you have a vicious cycle in which things that should happen, could happen, don't actually happen.
The Lending for African Farming Company, or LAFCo, is a new $15 million loan facility exclusively for African agriculture. It is backed by the German Development Bank, KfW, and the British social impact investor, AgDevCo. It will support the working capital needs of agribusinesses and cooperatives throughout the region, deploying loans needed to purchase crops from smallholder farmers or to provide them with yield-enhancing inputs.
What LAFCo is going to be doing is to provide that early stage funding to demonstrate the track record of commercial investors. And when they do that, it will enable commercial lenders to come in on the back of the proven track record. So LAFCo is going to try to stimulate new commercial lending that otherwise wouldn't have taken place without LAFCo's investment.
LAFCo will be managed by Root Capital, specialized social lender with over 15 years of experience serving the needs of agricultural businesses in emerging markets. The blended finance structure of the facility, which combines donor funding from the German and UK governments with private capital, allows LAFCo to serve parts of the market that are still considered too risky or costly for most commercial banks and other financial institutions. By providing agricultural enterprises with finance, LAFCo will help Africa's entrepreneurs and farmers meet the food and nutritional needs of a rapidly growing population and create inclusive economic opportunities that could lift hundreds of thousands out of poverty.